Yeah. Okay. Thank you, Sam. I think it was a very fast and interesting introduction of Starling Bank, and maybe we can elaborate in our little chat now. So first, I want to take you back to the early stage of Starling Bank, and what was basically the business model of Starling Bank, how it developed to what we see today. And I think you went fast through the slides, but we see that you're offering a lot of banking services today. But how it developed, was it like that from the beginning? And maybe what were the main challenges in the first days?
Yeah, I would say we started simple. We actually consciously chose to start with the most complex banking product, the transaction account, the current account as it is in the UK. Most fintechs that we're seeing are starting with kind of lending and savings products. A lot of banks doing digital investment in the UK are going that way. It's much easier to write a business case because there's a clear cost benefit for it. But for us, the transaction account is the key to the relationship and building up the trust, but it also gives you access to a very cheap cost of funds to then monetize the bank later on with the lending operations. So we probably pay an average of 4 or 5 basis points for the £10 billion that we have on deposit. And so then we can move into more traditional lending measures. We bought a mortgage lender last year, a buy-to-let lender, to effectively utilize some of our funds. We have quite an unusual problem with a bank, which is we have a very low loan-to-deposit ratio. We accumulate deposits quite easily and quite cheaply because people have the current account. But building a lending book at any scale takes years. Zopa, European fintech example of that, took 10 years to lend their first £1 billion, and Starling at its current rate takes 4 or 5 months to accumulate another £1 billion on deposits. So we have to look at more traditional business lines and lending products too, like mortgages. It's the only way to utilize that level of deposits.
That's interesting, because actually here in Israel now we are starting to open our markets and infrastructure for payment institutions and new entities that will be non-banks. And Starling basically started with a current account, which is a payment service at the beginning. But from the beginning, you knew that you don't want to stay there and you want to become a bank. So maybe you can elaborate a little bit about the difference between a payment institution, what Starling is doing, and do you think there's payment institutions, that's the next stage, they have to be developed to be banks or not? What's your view on that?
I think it's very hard to become profitable as a payment institution alone. There's certain industries you can. Obviously, merchant acquiring has been a very lucrative industry for a long time. But I was at Money 2020 in Amsterdam a few weeks ago, and the whole conference hall now is full of similar companies offering cheap access to payment rails in various parts over the world. It's almost a race to a bottom of a commodity industry there. So we knew we wanted a large, growing, sustainable business, and to do that, you need a real source of revenue. You can get some revenue from transaction fees, but it's going to be the lowest cost denominator, whereas if you can build the deposits, you've got the chance to run a lending business.
So it was worth it to go through the harder process of getting regulated as a bank?
Yes, it's not quick, I think.
And can you tell us a few words about the process that you went with the UK regulator in getting a banking license?
Yeah, the UK regulator's been quite forward-thinking in this. We basically went 100 years in Britain without a new bank being licensed.
That's even more than Israel.
Until Metro Bank got theirs in 2008, but Metro Bank followed a very traditional business model. They bought a mainframe core banking system from Temenos, and they opened physical branches in the country. And then in 2012, I think it is, the government at the time gave the regulators a dual stability and competition mandate, which was a fairly small tweak to their mandate, but it made them start thinking very differently, which is actually, how do we get new entrants in? There's effectively 5 banks that have dominated the UK market for a long time. And they came up with a new authorization process, basically. There was a chicken and egg problem that to get a banking license, you needed a significant amount of regulatory capital, but no investor would put the money in unless the institution had a banking license. And so they delivered a phased approach to that, basically. So we probably spent 18 months in discussions, then formal application to get what's called authorization with restrictions. So it's a full UK banking license with one small restriction, which is cumulatively, as a bank, we could hold £50,000 in deposits in total, which is quite limiting. But the process works because we can then take that banking license and that small-scale demonstrated operation to investors to raise the additional money to then have the restrictions lifted over the course of the next 12 months or so. So that was summer 2016 through to May 2017 when we fully launched the bank. And that change in process has been hugely effective. I think there's been 25 or so new banks licensed in the UK in the last 6 or 7 years. So it's had a real impact.
So just another follow-up question on that. So what's today the relationship with the regulator? How often do you feel them or see them in your day-to-day work?
We're talking to them constantly. It's a very important relationship to maintain because they can take our license away and customers need to know that we're doing the right things. It's very hard as a new bank, like the legacy banks can get away with a huge amount. RBS was effectively out for days and most of the customers stayed with them. Whereas I think as the new entrant, if we were to have a small problem or in any way to be misportrayed in the media, it could be hugely harmful to the business. So, I mean, we're talking to the regulators day in, day out. I know Anne has the formal meeting with them is every month or so, is the main catch-up on every topic across the different areas of the business. But we have particular obligations as senior management in banks that and one of those is that the regulator needs to be told of anything it might reasonably want to know. So they're not prescriptive in what it is, but the obligation on us is to ensure anything that might be of interest to the regulator we share with them immediately.
Yeah, so they follow you closely. Yeah. I want to go back to Starling and what's well, we know Starling is a fully digital bank, and also with its customers, it came with a new kind of relationship. Maybe that wasn't before in the incumbent banks. Can you tell us a little bit about that? What was the value that you gave customers that wasn't there in the market before you came?
The relationship with customers is quite interesting in banks. I think probably our happiest customers are ones that never deal with us, never interact with us. If their money comes in and their bills get paid and they know what they're doing through the notifications we send them and they never have to open the app, that's an excellent customer experience. We're kind of the opposite industry to wanting time in app and engagement and that kind of thing. So when customers get in touch with us, it's typically because something isn't going the way they expected or because they don't understand what's happening. And one of the unusual principles I think we took as a digital bank is none of us like AI tools, chatbots, kind of call center IVRs, that kind of thing. So if you phone us or talk to us, you get put straight through to a human because at that point the digital channels have already let you down and there's not really a chance that another machine is going to figure out what was going wrong when the kind of first-class app experiences we've had have already failed to answer your question. So most customers don't contact us very often, but I think they all love knowing there's a safety net there that when they want to get hold of us, they can get hold of a human very quickly, 24/7, and that is hugely expensive to deliver. But again, I hope it's led to the trust, and you can see the difference in us in terms of deposits compared to the peers that we're compared to in the UK market. Our deposits are much, much higher, even though our customer numbers are significantly lower.
Yeah, I think you basically were one of the leaders of the technology solution for Starling, and we talked about just now about the journey of the customers and the full digitization, and I want to ask, where was the technology behind it? What was the technology? How was the technology give you the way to at the end get to what you have here in Starling?
We started very simply with the technology that it was kind of built to change, basically. The one thing you can rely on is that you're going to make a lot of wrong decisions. You don't have all the information, and trying to predict what you're going to need to do in the future will just let you down and ultimately waste time. So we just got started with something, and it doesn't really matter what it is. And our philosophy is as soon as it's better than nothing and it's not going to cause harm to customers, we should make it available to them and learn from their experience in using that particular feature and that particular piece of technology instead. So we're a very odd technology organization in that the vast majority of people in it are engineers. We run a lean product and design function. I think we have no BAs, no BSAs in the traditional way. And the engineers are very aware of the business and what they're building and why, and they're hugely empowered to make sensible decisions. So the big strategic directions set by the board and the executive, but a lot of little changes that go through the product are just done by the teams that are responsible for that area of the system. Kind of peak Starling to most of us was when we had probably 30 people in technology. That was when we were at our most efficient operating. And so we constantly restructure the technology organization back down to a series of small startups that can operate and deploy independently. For context, we put the core banking system live 30 or 40 times a day as an organization now. One of our principles, we have a very different philosophy on change to traditional banks. Change is seen as a risk that needs to be minimized. But you're going to be forced to change, and if you are only forced to change infrequently, your teams are very inexperienced in doing so, and the scale of that change that you're putting live is huge. No one can look at it and reasonably understand what's in there and what the risk is going to be. And so we go very much the other way, which is how can we minimize the risk in change, because you're going to have to change. And to us, the way to minimize it is to release as often as possible, as small a change set as possible. And now there's probably 10 different teams running different parts of our system, different parts of our business. We give them the power to release independently from each other as well. We don't need that central coordination. All within the controls and sign-off steps that you need in a regulated environment. We can't do continuous delivery that you might in a trendy tech-only business, because it takes 4 people or something to sign off a release to hit our regulatory controls.
So technology is the main thing. We were in a supervisory visit to the US, and we met there with one of the big banks there. And when we met with them, they said, we're not a financial institution. We are a technology institution that at the end we give financial services. So where do you see Starling? Are you a fintech, neobank, a bank, maybe a technology company, or maybe more to ask where you want to be?
Yeah, it depends who you're talking to some extent, because I sat on a stage like this about 4 years ago with the UK regulator in the room and said Starling's a technology company first that happens to operate a bank, and it probably wasn't their favourite answer of the day. So obviously...
we won't tell the regulator anything.
We have some very serious obligations as a bank. We have to follow those, but it's a very technology-led business. A quarter of our executive team can write code and still does, which is extremely unusual. And one of the changes we've made this year, what the engine entity that I run now, is we've formally split the technology business from the UK bank. Partly because we supply technology to a number of other institutions now. 25 other companies are running our technology, and it's an area we really want to focus on and grow. We've been through the UK license application process. We're hopefully near the end of getting a license in Ireland as well from the European Central Bank to operate a separate Irish bank, which will run on the same technology. We don't plan to get banking licenses all over the world. It's very time-consuming, hugely capital-intensive, and you need a lot of local knowledge and experience, and then it takes years to build a brand and trust. So our plan to be the global player is to just supply technology to other banks and financial institutions in other markets. So right now, we're a bank. The bank is the dominant entity in what will soon be a group of siblings. But the long-term goal, if you talk to us and if you talk to Anne, is for the technology company to be almost the biggest side of the business that happens to run a fairly large-scale UK bank and European bank as reference clients as well to prove out the technology and make sure we invest in it and make it as good as it possibly can be.
Okay, that's interesting. I wonder if we'll see other banks goes on that way, and then maybe that leads me to the next question. We in Israel working really hard to implement open banking here, and we just the supervisor talked about it in the morning. The law was started last week with opening the data of current accounts and cards, and in the future we'll open also data on loans and savings and securities. How's the open banking in the UK was integrated in Starling's business model?
Yeah, it's been an interesting journey because the whole bank is ultimately API native, and we actually launched the APIs to developers a couple of weeks before we put any bank accounts live, so people could play with our sandbox bank and APIs before they could even hold an account with us. So it's something we've always believed in, but actually the impact on the market in the UK probably hasn't been as large and as quick as everyone was anticipating, partly because the scope of the regulations is actually quite narrow. The level of account information you can get out is quite limiting, and without people's savings and pensions and borrowing and investment data, you're still limited in what you know about them. And when you see the lines on your bank statement, you don't really know what they're buying or what it's for or what kind of utility tariff they're on or what kind of mortgage they've got, what kind of mortgage rate it is. And so your ability to offer advice and guide them is limited. And on the payment...
It's good that we're in Israel. We're going already full way, and we'll give data also on deposits, loans, securities.
I loved hearing that. It's exactly what I would do if I were setting up that kind of initiative. So we've seen a limited effect there, and a lot of the people who kind of set up aggregators originally are going out of business already in the UK. The money for them is drying up because there's no business model for it. The area where we have seen more success is actually on the SME side. Businesses spend a lot of time on financial admin and invoicing and making payments and reconciling payments into their accounting packages, and that's where we see much higher use of what's known as the AISP access in the UK. You can really simplify a lot of business administrative tasks, whereas personal banking, once you've got it set up and your direct debits are going in and out, you don't do very much day to day, and so it's hard for digital channels to make your experience any better, and the information is too limited to offer and sell you other products as people predicted.
It's actually interesting because the next stage of open banking, or the next jump in services, and we can see it in some places and also maybe in Israel, is the use of APIs as banking as a service. Maybe Starling is already with the Starling engine starting that. Maybe platforms. I saw in your presentation that Starling has a marketplace also that has collaboration with other financial institutions. Maybe can you a little bit tell us about the model of the marketplace that Starling is running, and where do you see this market? Are we going to see more marketplaces, more platforms? The competition will go from the direct financial services to a platform that gives maybe a much whole experience for customers?
Yeah. They're kind of two different business lines. So we have APIs over our systems, so we have a business line running payment access through to full banking as a service. Like SumUp, a big merchant acquirer in the UK, pays out its merchants through our payment APIs, and Standard Chartered, for instance, are launching their first retail offering in the UK, actually, which will be through our APIs and core systems and our banking as a service. The marketplace has been an interesting experiment. It's something that's existed in the bank right from the very beginning, but we didn't really know what it could be or how it was going to work. The kind of idea behind the marketplace is we only offer a limited set of financial products at the beginning of the current account only. We now do overdrafts and loans, but we don't plan to offer the investments and pensions and savings or insurance that you may get from a bank. But people still want to see and manage and understand their money in one place. And so the idea is we integrate these providers, and you can see your balance in your investment providers and see how it's doing, and maybe top them up from there as if they were a seamless experience from one bank, but actually they're being provided by other institutions. It's had limited success. I think the real challenge is because all of those accounts are outside of scope of any API access standards. Each one that we onboard is subject to a whole set of commercial agreements, and then we have to find the counterparties that can build APIs, getting them to build APIs, a deliberate point-to-point integration, so the speed at which you can grow it at the moment is quite limited. So it's maybe not had the impact we hoped it has because the world hasn't moved to APIs as quickly as we thought it would. So if you happen to use the providers that we have integrated, it's fantastic. It's a lovely experience. But a lot of the time, your savings and investments and pensions are held elsewhere with people we can't connect to yet. So I hope as the world moves towards more open data, I know the Australian equivalent of open banking regulations includes utility providers and telephony providers and that kind of thing as well. Then I think you could do something really interesting from it from the bank side. But again, for now, the marketplace makes more sense on SME because there's a more limited number of third-party providers that SMEs interact with, and they're generally more digital capable, and they can see more benefit in a seamless kind of real-time integration.
Yeah, so there's still a way to go on that side. Maybe where do you see Starling? What are the next challenges of Starling Bank, and maybe more specifically, what Starling need to do, or maybe other neobanks, challenger banks like Starling, in order to have a more wide spread of banking services, like more traditional banks, maybe more customers and not only digital young customers. What's the next challenges for Starling?
I think we'll stop at a fairly traditional banking set. We don't plan to build the super app that some of the other fintechs are going down. as Anne would put it, we like the hard, difficult, heavily regulated problems that most other people don't want to deal with. Anything that's easier and more a pure technology problem, there's going to be a lot more competition in, because most people don't want the burden of being regulated. If you look at someone like Apple, Apple is moving into the financial services space quite heavily in the US at the moment, but it isn't actually a regulated entity. The Apple card is a Goldman Sachs provided card underneath. So we're focusing on those experiences and the services and products that require you to be regulated, that are more complex to deliver. The plan as a business is definitely to become an incumbent, I guess. That's the end of success in the UK. There's a limit to how big we'll be allowed to grow, but we're a long way off it, and we certainly intend to get there. And then we will do so in a few European countries directly, and after that we will sell technology to other companies. That's the plan. A challenge, other than the moving market and expectations and regulations, financial crime is a real challenge for the whole industry. We were talking a bit about this at dinner last night. The UK has a real problem with financial crime right now, because it's switched from cards that everyone knows and understands and has systems to deal with. Strong customer authentication and things have really helped reduce card fraud, over to our real-time payment rails, effectively, through what we call authorized push payment fraud. And so all of a sudden, the weakest link in the chain is no longer the technology and phishing and the login experiences and authentication. The weakest link in the chain is the human. Most fraud in the UK is the legitimate owner of the account accessing their own bank account and wiring money to another individual under false pretenses, which sounds preposterous. Someone phones you up and says, I need you to send me all the money in your bank account. It's mad. And yet this is happening day in, day out in the UK. Hundreds and hundreds of millions of pounds were stolen this way last year. And it's very difficult to stop, because everything looks correct. It's the right device, the right person, the right biometrics, the right information. The payment might be out of character. Not even all the payments are out of character. Some of them look fairly normal as well. But that particular payment, the person is doing under a particular moment of stress, under false pretenses. And as we're learning as an industry, it doesn't matter how many warnings you put in front of them, how many questions you ask. We have whole journeys now that will effectively have a little interview with you if we're concerned about the payment, to ask why you're doing it, why you think you're making the payment, where you got the details from, warning you that anyone on the phone telling you to make a payment is a criminal, because there's no legitimate circumstance in which this app-only bank would ever phone you and say, could you move money for us? Obviously, we can do it on your behalf if we need to do so. But customers are falling for this, and the industry doesn't know what to do with it, and the regulators are struggling to figure out how to stop customers losing their money from this.
They're pointing me that our time is over, but maybe just one more minute. Because it's so interesting to talk and learn from Starling, and thank you for that. But maybe, where do you see Starling in 5 years? And is there a chance that we'll see you in Israel?
Not as a direct banking brand, but absolutely, if anyone wants banking technology, come and talk to me. We're very interested in that. Hopefully a large European bank at that point, with a large technology business supplying technology to banks all over the world. That's the success for us in 5 years. It's very hard to predict. If you'd asked me this 5 years ago, it would look nothing like Starling today. So I'll probably be proven wrong, but that's fine.
Thank you, Sam, and good luck. It was a pleasure.
Thank you very much. Thank you for having me.